Okay, hi, this is Mark with TradeVest, and I'm promoting our trading room, futures trading room. We trade the NQ and the ES, and we day trade. And so right now you can see our screen. Um, I want to go over a little bit about how we trade and what we look for. You're welcome to come in for a 7-day trial. Our goal is to make money. I'm going to show you our website in a minute so you can have a look at it and see our results. One second here. Okay. So first of all, let me show you our trading room. This is what our screen looks like. Get this to move. Oops. Oh, okay. You got to move that mouse here. There we go. Okay. So let's open this up a little bit. Okay, here's the NQ. So we use a trend direction and trend strength, two different types of indicators. One looks at the direct direction, and when to do that, we have a green line here, and this divides the market in half. So anything below is weak, anything above is strong. And then we also have a faster indicator, which gives us the direction of the market. So this, of course, is really a matter of interpretation when we take our trades as far as direction. For instance, this here is telling me that the market is going down, which it is, but it's still in the upper quadrant, in the upper half, which means it's bullish. This half is bullish. This half is bearish. Let's see if I can use something here. So this is bullish and that's bearish. Okay. So if something's coming down here, if this is coming down, we're not jumping on the short because we're still in a bullish section. Got a barking dog. Here, however, we can see that there is a trend breakout right here, short-term trend. It's above the fast and slow moving averages or indicators here, the dotted lines. So the yellow, we're looking at the red line, and it's breaking out, and it's come above the blue line here, and it's in the bullish section, it's in the bullish quadrant, or I'm sorry, the bullish half of the market. So we're looking for that type of a move here. In our day trading room, this would be a very good move, a very good trade to take, because it's what we call an up move. It's up here, it's up, and it's in the upper half. So it's in the bullish half, and we're moving higher. Now, this also would actually also be a good trade because it's opening, it's beginning, the trade starts in the upper half. So this would be a good move. We would not take the short because we're in the upper half, and we would take this long here and not take the short. So let's take a look at another day. come down here. We're not involved in this trade. This sets the tone. This is 6:30. I'm in California, so the market's opening here. And we see that the market first pulls back a little bit, but we're not interested in taking this trade because it's in the upper half. So it's a bullish, we're still in the bullish strength or strong position, bullish direction. And then we now have a turn here and the market's starting to pull up. We're going higher in a bullish market. So we want to take this trade here, and we're in the NASDAQ. So we're at 477.50, 447, opening here, 447.50. And we can take it all the way to the fast brown line here as an exit. So we can enter on the blue, exit on the brown. We entered going into a bullish trend. We call this an up move. The fast directional is up. The overall dominant direction is up. And if we look at the trend strength is blue, which is positive. So this is a good trade. We take it right away. We jump on it on the open with confidence. As soon as this line here gets penetrated, we jump on it, which would be on the open of that move. And since this is a 5-minute chart, it'd be 7:05. So at 7:05, actually, we start the trade. And we are in it until 7:40. And we've made almost 20 points, 47, 57, 30 points on the ES, on the NQ. The next move here, we're not taking this move to start with because because the market's in a bullish position, but then here it hits the divider between bulls and bears. And we look here and we see that our trend strength has turned negative. This gives us an okay to take this trade, and we take it down to the fast brown line here. So we've come in at 447, which incidentally is exactly where we got in here. We got in 447. We are now going short at 447. And we take it down here to 394. And then we're exiting 394. So interesting how the market is like an elliptical, setting us up for a down move now after the up move. So the market gave us a small up move and then rejected and came down to a bigger down move. So now we're looking at this move here. And this is a lower low. This was a low here. This is a lower low. This is how we analyze our moves. We're in the lower section, which is bearish. This is where the market could move down lower. So it starts to move up. So we have no reason to take this move here. But when the market hits the 50 line or the neutral line between bull and bear, we look down here at this point and see that the market is giving us some trend strength for a possible move up. It's not a very strong trend strength. If we didn't take this move, there'd be no harm. I mean, we've already made 2 good trades here. But if we took it, we're at 11,431. Okay, this move comes in right here at trend strength at 447. Notice that 3 times we've hit 447. 447 again, because this line here is really the dividing line between the relativeness between the bulls and the bears. So it's not unusual to be hitting those numbers over and over. So again, we're going long again at 447. We went long here at 447. We went short here at 447. We're going long here again at 447. Right there. Well, actually, we're opening at 431. It closed at 446. We're going to take it a little early at 441 because we can do that because we've crossed the 50 line. So at 431, we're in, and the market takes us all the way up to 513, which is a huge move. And this is the end of the day here. No, this is actually 1150. So I believe this is where Donald Trump said he's not going to be offering a stimulus package until after the election. So we got out right when the market was hitting our brown line, which would have been at, well, it's hard to say because it moved very quickly. So as soon as this brown line got penetrated, we're starting to get out of the market. Here it's staying above the brown line. As soon as it hits the brown line, that's our exit. So the dynamic stop continually moves up with the market, and then it gets out. And right here, we see that this is a higher high than here, and we're in a bullish area of strength. So we're not looking to take this move here because it could turn around on us. So we stay out of this portion of the trade. But right over here, it's almost 12 noon, which is 3 o'clock Eastern time. We see a huge amount of bearish strength coming in because of these heavy moves down. So we take this trade here at 336, right there, 336, and we exit at 343. So we lost a few dollars on this one. The low was 238. So obviously there was almost a 100-point move, 336 to 238. We could have taken any part of this and exited. A lot of volatility over here, a lot of volume. So we're doing this video just to get you acquainted with how we trade, and what we look for. This is the NQ. Race. And let's go over to the ES. So this is the ES, and we get days like this, which are very, very choppy days with very little trend movement. And the whole idea, in my opinion, here is to be very careful not to lose money. If you take a bad trade, then you just want to get another trade in and break even for the day and move on, because there's days where you'll make plenty of money. But the market here is consolidating a very tight range, very close to the 50 line the entire time. So the bulls and the bears are very close together here. And you can see the direction, the trend strength is very mixed down here. No one's winning. So you get in, you think it's going to go up, comes back down, no trend. Here's a little bit of trend. Would have been very hard to get in there. We didn't see any trend strength on this side over here, right there. So very mixed market. If you didn't take any trades on that day, which was on the 8th of October on the ES, no harm. Let's go back one day to the 7th. So let me show you how we analyze our trading. We have our trend direction and trend strength. In this day here, everything is bullish. It's a very strong up day. So very strong, powerful move. We start off at the open, 6:30 Pacific time. We're in an up section above the 50 or the neutral line. the market moves up here and at the open. And we can take this move because we call this an up-up move. The market is going up in a bullish direction. We're moving up in a bullish direction. Market's already bullish and we're moving up. So we can take this trade here. It's confirmed by the trend strength, the blue line. And we get in at 33.89 and we exit 33.90. Not a lot to be gained. The high was 33.94. Not a lot to be gained, but we got in. Okay, the next move here is a down move in an up section. The market's bullish because we're above the 50, above the neutral line, but we're coming down. We don't take this trade. We don't take a trade that is coming back to this line, rarely. I will tell you when we do, but that's the one move we don't like to make. As you can see what happened, the market continued up. So we're in a bullish move. We would prefer to take this trade. We want an up move in an up section. Down here, if the market was down here, the trend direction would be below the 50, and we'd be looking for down moves. This is another up move. Now, this up move was not confirmed here by the trend directional indicator, by the trend strength indicator. But when you have an up, it's called up because it's in the bullish section. The market is generally bullish. It's above the net neutral line, so it's bullish, and we're moving up. So we have permission to take this trade. It did get bullish strength right here. And as you can see, there was bullish move. A lot of volume started pouring in over here. So most of the move occurred at this point. If you wanted to wait for a confirmation from the trend strength indicator, you could. At this point, however, you're most likely going to wait for the bar to close. So you're at 34.05, exiting at 34.0650. Only made a point and a half if you waited. If you got in at the beginning of the move, usually we like to look at 2 out of 3. 3 out of 3 is perfect. We're very excited. We get excited to take a move when all 3 requirements are met. In this case, we're bullish is one requirement. For an up move, we're in an up here, a faster move within the bullish framework. So we have a 2 up. It's called an up. And here would be the 3rd up right here. But we didn't get it here. We didn't get this trend strength here to confirm, but because we got 2 out of 3, we took the move. So we started getting at 33.97 and we exited 06. So we got ourselves almost 10 points. This is a down move. We have no confirmation to take it. We only have the one indicator saying going down, but it's in a bullish environment. That's 1 out of 2. And here we can see that the strength is still positive, not negative, bullish, not bearish. We don't take this trade. The next move would be right here. And we have 3 out of 3. Positive strength on the trend strength indicator, bullish dominant direction, dominant micro trend is up. Blue line is crossed right here. We enter at 34.12 and we exit 34.13.15. Not much gain, unfortunately. Then the market veers off at the very end of the day. We don't, now here is a down move with down, down strength, bearish strength, but we're in a bullish quadrant. I'm sorry, a bullish environment, or a bullish dominant directional section. So this is really a toss-up. If you took the trade, you get in 34.0975, 34.13 short, and the market closes at 34.07. So if we don't use market profile, we don't use order flow, we use trend direction and trend strength to decide our moves. Let me take you over to our website. InTradeVest, intradevest.weebly.com. We've got a pretty good track record, and we keep it up to date. We're making this video on the 8th. We're going to put our returns in for today. This gives you an idea of how we've been doing over the last several months. We're just barely up in October. This is the ES, the NQ moves. This is the date. This is the trade. Points gained, points lost, dollars gained, dollars lost. This would be September. We do a fairly good even amount of both NQ and ES. We did total $9,750. This would be August, $69.50. We're doing all this with one contract of the NQ and one of the ES. Most of our trades are smaller gains. Oftentimes we look for 5 points on the ES when we trade. Sometimes we get a nice runner on the NQ. Huge runners. Those really helped to build our profit for the month. This was June. A lot of trades, a lot of big trades, some losses. 20-point loss on the ES. It's $1,000. This was a 58-point loss on the NQ on the 11th, but we got it back on the 12th very nicely. And here's May. So we do a pretty equal amount of trades between the two. So you can go to our website and you can look at all the trades. You can go to that day and look at where we took the trade. Got to put the hypothetical disclaimer in there. It's required. You know, we're really just trying to have our subscribers make a good living from our trading signals. If you follow our signals, you do very well. You can also have our signals auto traded. Not everybody wants to sit and trade all day. So every trade that we take is sent to our auto trader, a broker, and if you have an account set up with him, then you can have our signals traded for you. And to be quite frank, I think it's a good idea. Our suggestion when you're doing this trading, just trading one contract of the ES, one contract of the NQ. Sometimes we do it simultaneously. We suggest $10,000 of capital when trading. You can come into our trading room for $299 monthly, includes a 7-day free trial. So if you cancel during that period, you don't find that our trading style is for you, you're not charged. So you can contact us again, intradevest.weebly.com. We have contact information there if you want to contact us. And we thank you for watching our video and hope to see you soon.